Pick it up, let's go!
Good afternoon, everyone. Welcome back. Today is Wednesday, March 8th, 2023. And as always, let's start off with a daily chart of the spiders. Same spiders chart that we've been going over the past 2 weeks now. The downsloping trend line, bullish above, bearish below. Nothing really to make out of today other than it looks like it's trying to carve out a bottom. Going over to my favorite market leading indicators, Russell 2000 was flat pretty much on the day, barely down at all. And then the other market leading indicator, the transportation ETF, the Dow Jones Transportation ETF, IYT, was actually up slightly. So it's up slightly, but it was also up on volume. So it might be telling you that it's really trying to carve out a bottom here. We are not 100% sure, but that's just what it looks like. And you can kind of tell if we're coming over to the SPY hourly chart. This hourly candle was the candle of the day where we were trying to, and let's go over to the 10-minute chart right here at about 9, or it was actually 10 a.m. This put in this spiders chart put in this candle for what we were hoping on the Jerome Powell 2.0 news. We're trying to get a long position out of this at 395.61 for a day trade in the lazy day trader channel. However, it did not get down there. It just stopped at what was still a good level, just not the level that I wanted in the room. So why I say it's carving out a bottom, and then you have the market leading indicators either flat or slightly positive on volume, or at least the transportation ETF was on volume, and nothing to make a federal case out of for the IWM, but it was still, still flat on the day. So nothing to make a federal case out of. However, how I'm looking at this is one of two ways. And let's get my handy dandy pen out of here. So you can look at this of a simple retracement on the hourly chart. It's coming back down. It's going to test some lows. And now it put in this decent candle. It never really closed above. It really needed to get above 400 right here to start convincing anybody and the bulls that we have some work to do, but we're working on it, and we're going to go recapture all that stuff and take off to the upside. Now, it didn't do that yet. Who's to say in the post market tomorrow it gaps up here and we start opening here? Maybe we fill the gap in the morning and then we take off. That could certainly happen. Now, what is jumping off the chart here is simply a bear flag pattern, right? And it's very, very easily could be just building energy to make a significant move down in the other direction. And if you look at, let me get rid of this pen here. If you look at the daily chart, that's pretty much where we are as well, is we're looking at, does it really want to build energy to push below this trend line, right? Let's break out the pen again. Does it want to build energy? Well, let's get rid of that. Does it want to build energy here, right? Maybe a day or two, maybe 3 days would be ideal for that case to push below, right? Or is it going to recapture this and fake everyone out and go to the upside? Those are the two scenarios, the two obvious scenarios, right? It's bullish and bearish. There's nothing in between. But how we're reading the tape is it's really just stuck in this area here until it makes another move. There's really nothing to do with it at the moment. So keeping an eye on it. Now let's get over to the day trading channel because I have some lessons here that I would like to go over with you guys today. So updated the track record. We have a great track record so far. Wednesday, March 8th, we got our buddy Gerald Powell, who also spoke again, or at least released some notes. I wasn't too sure. I just knew that some notes were getting released at 10 a.m., and that could send the market down, right? So it's kind of starting to be do or die time. Like I said, if we go back to the chart, we really need to start pushing above for the bull case, or we're going to get some pretty nasty volatility once this breaks this trend line. And I know a lot of the bears are waiting for that. So I'm just the umpire calling balls and strikes. I don't have a bias right now either way. I'm just watching it. So it's kind of starting to be do or die time. The SPY needs to get back above 399.50 or about 400 for starters for the bull case. You'll see that. Let's go back to the 10-minute chart here, or there we go, the 10-minute chart here. So you'll see that it was really fighting this 399.50 area, right? Trying to build energy to either go back above or it's going to go back below. And it just couldn't do that. And at the end of the day, it chose its favorite spot, which wasn't our favorite spot for a bounce, but it chose its favorite spot from 10 a.m. in the morning to go run a test of it. And then it kind of took off. And in the pre-market or the post-market, we're seeing that it's a little bit slightly positive. So it could be going above tomorrow. And who knows, maybe opening above, but we'll see. Okay, so back into the channel. There we go. So lazy day trades coming soon. These day trades, I wanted to go over a couple of them with you to give you an idea of this strategy and when these numbers hit their levels, how well they work out. And I also had another one, CNC, which we will be going into. That is the benefits of being in the room, that I have day trade alerts from my system with a scanner that I have, so you guys get that benefit as well as they come in. So we had LI, and I'm going to go over LI, CRWD, which is CrowdStrike, and then CNC, the one that I posted at 9 a.m. here. So let's go over to the charts. Okay, so there are two different types of gap plays. In the morning, I'm looking at the most volatile names overnight with the heaviest amount of volume. I'm talking about equities that trade over $1 million or over 1 million shares per day on average. So when you're getting these very highly liquid names that institutions are backing, that people are buying as a part of their portfolios, and you have these enormous moves into certain levels, you're almost 8 times or 9 times out of 10 going to get a solid reaction from an intraday perspective, and maybe even a swing perspective into these levels. Now, you have two different styles, or not styles, you have two different types. Weak gap ups, and then you have strong gap ups or gap downs. So LI on the board today in the Lazy Day Trader channel, I put down LI, and this was a strong gap down. CrowdStrike was a weak gap up. CNC was a weak gap down. Now, if anyone experienced can kind of see where I'm going with this, why would, for example, CNC be a weak gap down? Well, it's already been in a downtrend, correct? And when I saw, it was actually, I think in the pre-market, it was around 66, right? And what happens with a weak gap down or a gap up, whenever an equity is in a trend, in a significant trend, whether that's down or up, and it's gapping into a significant level, right? We really like this level over here. It's gapping into a significant level that's following its trend. That is called weak. And why is that? Because it's called exhaustion. The institutions have already been selling this thing for months, for days, for weeks. And by the time it's down here and gapping overnight, and what I mean by gapping is, so here was the close yesterday. Let's clean this up a little bit here. Can I clean this up? Yes. Okay. So this was the close yesterday. And this is where, let's say, it opened over here. Well, there's a huge gap right here. And it's going to just continue into the all-important 6350, okay? And when it does that, we are going to get a solid, more than solid reaction in the other direction 9 or 8 times out of 10, okay? Because the sellers are done, the institutions are done selling this thing. They've been unloading it all of this time, and then they gapped overnight when they were unloading it, and they're going into a huge level where more institutions go, that is where I'm going to play defense on this thing now. Okay. Hope that makes sense. Let me know if anyone has any questions on a weak gap down. Same thing for a weak gap up. Okay. CrowdStrike, weak gap up. Now, if you understand the concept of CNC, now you're seeing, okay, well, look at this trend. It's going up, 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 up. And now I think it was in the pre-market, it was up here. And I said, if that thing starts running, it is just going to get so exhausted by the time it gets up here. That was a horrible arrow. But it is just going to get so exhausted by the time it gets up here that it is going to have a solid reaction in the other direction. You have a 200 period moving average. You have a fib retrace right at around 148.14 and a gap. That's what we called 3 different factors for that day trade. That's big time. If it doesn't get in there, we don't care. Just let it do its thing. Don't try to chase anything. That's what we want. This is the level we want. You've seen how many of these work out already. Just in the 1 month that we've been up and running in the channel, and you've seen these work out. Just let them get into their levels, and the rest will work 8 to 9 times out of 10. Okay. Now, strong gap down. Now you can kind of see where I'm going with this, the difference, right? Strong gap down. You have up, 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 up. And then that means institutions are, when it breaks right here, that means institutions are unloading. This is why you go lighter share size. So I typically let's say I have a risk profile for $2,000 per trade. I want to win $2,000 and I'm okay with losing $2,000. And that's my full position on trades. For a great trade, right? So a great trade is going to be our weak gap downs or gap ups, just like CrowdStrike. We're going to short the hell out of that thing with as much position size as we're comfortable with losing and winning. Same thing with CNC. We're going to buy the hell out of this thing with my $2,000 win or my $2,000 loss if it doesn't work out. For LI, this thing, you are playing a strong gap down. Now, we're going into an amazing level here, right? Amazing pivot level, amazing breakout level, an amazing fib level. I don't have the fib up, but it's amazing fib level. However, it's a strong gap down. So what are we going to do? If I'm usually okay losing $2,000 per trade and winning $2,000 per trade, perhaps on this one, I'm going to cut it in half. So I'm going to go $1,000 risk and $1,000 reward. And that is how you simply, if you're going back up to the lazy day trades, and I have, okay, let's use for example, LI, the stop and target, let's use the 35-cent mark. So LI, 35-cent mark for a stop, and it's a strong gap down. Well, I'm probably, given my $2,000, I'm probably going to only buy 2,850 shares of this, approximately. And that would equal $1,000 on a 35-cent gain. Okay? Now, if I go to CNC, okay, and I want to get $2,000 out of this and risk $2,000 on this, because it's not about winning, it's about how much you're okay with losing. Going back to the channel, let's see. CNC, let's scroll down a little bit. CNC, I had a 50 cent to $1. So let's use the dollar for example. Okay. Now CNC, I'm going to go with, well, maybe let's cut it in half. So 75 cents. So 75 cents on CNC that I'm willing to lose and gain on CNC. So at 63.50, I'm going to buy 2,600 shares of CNC, because 2,600 shares is approximately $2,000 loss, $2,000 gain. Now I'm just using that $2,000 mark. You can be $100, you can be $10,000. It doesn't matter. It's all relative to each individual. The fact of the matter is these numbers work and the strategy works as long as you can execute and be comfortable with the strategy. So I just wanted to overview, because I know a lot of you were messaging me about basic understanding of day trading this strategy, and it's called gap trading strategy. And I just wanted to show you guys how I kind of manage the position size for these trades. Now, they didn't get into their numbers. Who cares? I don't care. If they don't get into the number, then I don't want them. So hopefully this is beneficial for you guys. I not only have these day trade setups that right now I think we're close to like 80% on the win rate if you're just painting by the numbers. But I'm also talking about what the spiders are doing, sometimes what the NASDAQ is doing, and you guys can take trades as you see fit. So I called out right here, 9:28 a.m., the SPY opportunity for me, 395.60, give it $1 breathing room on candle closes for a stop loss. So whether you're working remotely or if you are a full-time trader, I mean, you guys have these important spots that I'm calling out that you guys can see, you can disagree with, you can agree with it. Everything is trader's choice. But the track records don't lie, and we're going to keep building these up. So again, anybody have any questions on this? Let me know. I narrate the day as it goes on, as the trades work, as the trades fail, what to look out for. And hopefully that this has been helpful for you guys. And I've been doing these, I do these videos every single night to recap the day and provide some education. So again, let me know if anyone has any questions. See you guys on the charts. See you tomorrow in uniform, ready to go.